day, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Thursday. We're at December 8th, 2022, and we're at 5:35 p.m. Central Time. So tomorrow we get the first of a series of important reports, I think very important. Today we saw the jobless claims. Tomorrow we're going to get University of Michigan consumer sentiment. We're going to get the all-important PPI number. I think those two by themselves give you the day's action leading into next week's CPI and the Fed setting the policies. So this is very important time. After those, you get 1 week of trading, and then it becomes that Christmas week period where things die off. So the volatility is going to get fairly big, I think, over the next week and a half, then die off. So be ready for that. Now, before I go too far, we are hard at work on posting the outside day course. It'll probably come up for you, I'm going to say, early part of next week. We're working through it right now. It's on the website. You can't see it, but where it's going to be, the wording's got to be there, all the links for it, how it tracks the course and so on. So we're behind the scenes doing that. I, in the meantime, took a big part of the day, and I've begun redoing a final chapter of Bollinger Bands that we'll figure out how we get to people that have bought it, because I found some more information out that I want to include in that course. So let's call it a small update. And I learned it as I was doing the outside day, and I said, why didn't I say that in it? So I'm going to go back and make that change. Now, obviously, it's all about the dollar. Dollar, if it's down, impacts the metals to the upside. That's the way that I think you have to interpret the next week of trading and what goes on. I can't even begin to tell you if the Fed stays with 50 basis points or 75 at the next meeting. I know that today, if I'm a Fed member and I'm looking at how the unemployment claims are going, I'm not happy that they're so slow to climb. They are moving better on the continuing claims, which are claims that didn't just happen. They've been at least a week in the system, and those people didn't go out and get a job right away. Maybe that means they're harder to get. It's hard to read that. So I think that we really focus in tomorrow, how do we feel about the economy, what's going on. Notice that you're up 50 points in the crude, and that just gets you over $72 a barrel. So Joe, are we doing any buying of the crude? Is it time? And remember, the Keystone Pipeline got shut down today for a bit there as the market saw a spill. You remember, you get 600,000 barrels a day off of that, and the market didn't budge. It really didn't hold up at all on that. I found that fascinating. Markets get a piece of bull news and they don't react bullish. Watch out. When we look at the weekly gold chart for the week, you're just meandering. You're down not even 0.5%. So you haven't gone anywhere so far. Remember, this is already Friday trade. You're sitting here, as you can see, just sort of hanging right there. I think everything's waiting on these next 72 hours of trading. Friday, Monday, Tuesday, very important. And of course, then you get that other part of it, the fourth day, and that's the Fed. But I think that this is where you're at right now. The trend is up, and it stays bullish unless you take out 1779.10, which was the last break low on this line, which is called a swing line. And remember, a swing line is made up of a set of rules that I teach in my full charting course, where you're looking at, let's say, higher high days, lower low days, inside days, outside days up, outside days down. You use those in a certain way, and it draws the line for you. Because the one thing you don't want to do is be drawing these lines by hand without a set of rules. Without the rules, you're just going to make believe and make things up. You don't ever want to do that. You want it to be mathematically, this is how it works. Where's the resistance? Pretty clear to me, the 200-day average. Where's the support? Pretty clear to me, the 18-day average of closes. What about the Bollinger Band? It's tied right in now. 1888 to 1820.90 for the 200-day average. And when you look at momentum, you've gotten up to a point where now you got overbought. I view a market as overbought as any reading over 70 in a slow stochastic. Either of those numbers over it, it's overbought. So do I think new money's going to be plowing into this? I do not up at this level. That's how I'd read it. When I step over and I take a look at the gold-silver ratio, silver's gaining on gold. In fact, it's the best levels we've seen in a long time. And you see that right up here. Traders know that the market that I had been trying to put out for my paid subscribers at nighttime, twice a day, I put out those updates, was silver over gold. And you could see the reason why. Unfortunately, it made the objective and I wasn't able to get them in that. Copper's still acting pretty good. Why? Well, it's obviously China at this point, but it's all of us. You know, copper's going to be looking and saying, what's happening with inflation? What copper really needs is for all governments not have to go up so high on this interest rate story to break the back of inflation that they can go up shorter, not stay as long with the rates, come down, and this market would catch on fire. Right now, I look at serious resistance, 392.50 to 394.65, the 200-day average in gray, the dark number, the Bollinger Band. That's where I think the pros are out. You're overbought as can be. In the platinum, you're in the middle of no man's land. We recognized this properly about 2 weeks ago when I said these bands are closing in on each other and you're just going to spin. You are spinning. Haven't quite done that yet in palladium, but the beginning of it is happening. You're now starting to pull the bands in. You can actually see what they're doing there. The trend is up for the first time if you settle like this. So all you need to do is that. If you take a look at the close going home, the market did settle at 1930.80 over that number. Now, it's the first time since way back here. It's easily, 3 weeks or so that it's over that. So you're going to attract some buying attention in the market from the pros with stops under that number. Objective, the combination of the 100-day average, upper Bollinger Band, and 200-day average. Pretty stiff resistance all the way up there. And in the dollar index, the battle has been and continues to be the battlegrounds right here at the 200-day average down to the band, the lower band, a Bollinger Band. You keep hearing me talk about Bollinger Bands. They're so darn important in understanding where they come in on a chart. Is the market embedded with them or not? Is another moving average with them or not? That's the part I'm adding to the enhanced Bollinger Band course, the chapter that I began today preparing. I'll probably have it done in a week or so. And I'm going to tie this all in for you. It's a bonus. Anyone that's bought the course before is going to get it. If I can find a way to find everybody that bought it, we'll be doing that for them. Not the whole course, just the wrap-up. And it'll be part of the new courses. We'll just add it right in. That's going to be simple. So take a look at this. You might want to learn Bollinger Bands. They're so darn important. Watch this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.